How do property tax installment payment plans work? Have you ever felt overwhelmed by the thought of paying your property taxes all at once? Well, property tax installment payment plans might just be the solution you need. These plans allow property owners to pay their taxes in smaller, more manageable amounts over a set period instead of one large payment. This can make it easier to keep up with your tax obligations without breaking the bank. So, how does it all work? First, you need to enroll in an installment plan. This usually involves applying before a specific deadline set by your local tax authority. To qualify, you may need to meet certain criteria, like having a prior year's tax bill that exceeds a minimum amount, such as $100, or having your taxes escrowed by a mortgage company. Once you are enrolled, your total estimated tax bill will be divided into several smaller payments. Typically, this means making for quarterly payments or monthly payments over 12 months or even longer. The first installment is usually due around mid-year, like June 30th, and it is often based on 1/4 of the previous year's tax amount. Sometimes, you may even receive a discount for paying early, which can be around 6%. Following the first payment, subsequent installments will be due every few months, such as September 30th, December 31st, and March 31st. Discounts for early payments may decrease with each installment. For example, the second payment might have a 4.5% discount, the third a 3% discount, and the fourth could have no discount at all. These discounts are designed to encourage timely payments and help you save money. If you find yourself needing more time, some tax offices offer extended payment plans that can stretch over 12, 24, or even 36 months, especially for those who have delinquent taxes. These extended plans may include interest charges, like 1% per month, but they can help you avoid additional penalties or collection fees. There are also special provisions for certain groups. For instance, elderly or disabled homeowners may qualify for special installment programs that allow monthly payments over 12 months without penalties. Some states even allow disabled veterans or property owners affected by disasters to pay in installments without incurring penalties or interest. It is important to keep in mind that if you miss the first installment payment by the due date, your plan may be terminated for that year. This means you would need to pay the full tax bill by the regular deadline. Once you are enrolled and make your first payment, you typically do not need to reapply each year as long as you stay on schedule. When mailing your payments, make sure they are postmarked by the due date to qualify for any discounts. If you plan to make a walk-in payment, be aware that deadlines may change if they fall on weekends or holidays. Additionally, if you sell or transfer your property, any unpaid installments may become due immediately. In summary, property tax installment payment plans provide a structured way to manage your tax payments over time. With the potential for discounts and special provisions, these plans can help ease the burden of property taxes. Just remember to stay on top of your payments and meet any deadlines to keep your plan active.